Hi and welcome back to our July update for Ayni Gold. The past month, the markets have started to show a more useful picture again for Ayni Gold. Gold found support again after several difficult months, and Bitcoin has stayed cautious with institutional flows still much weaker than earlier this year. And the real world assets kept moving into a more serious phase where the question is less about issuing tokens and more about backing usability, liquidity, and trust. So for Ayni Gold, July was about making the model easier to understand, easier to use, and we've worked really hard across the app, the concession, the educational content, and some live discussions which we had in order to enhance the product experiences around Ayni Gold and the gold units. I am myself Daniel Tschinkel, CTO at Ayni Gold, so let's dive into it. July was a better month for gold, for sure, I would say. So as always, we have the macro outlook of what happened after basically 4 straight months of sell pressure. Gold moved back into a positive territory, and the markets have reacted to the Federal Reserve, which had a softer inflation data that we saw and a much weaker dollar again earlier the month. So this was quite important for the move. And also Reuters reported that at the end of July, that spot gold was on track with its first monthly gain since February. So the move has still been kind of uneven, and gold pulled actually back at the final day of July as the dollar regained some strength. But the broader July picture showed that demand can actually return quite fast, and the macro environment becomes actually less hostile. So the rate picture was the main driver in this case, I would say, and the Federal Reserve rates left unchanged for the July meeting. That was very substantial because the markets reduced some expectations for the near-term rate hike. So that helped, of course, gold, because lower expected rates reduced the opportunity cost of holding a non-interest-bearing asset such as gold. And inflation, of course, also plays a matter because the softer US inflation data gave markets another reason to reassess how much pressure the Fed is actually under. So at the same time, the energy risk and the geopolitical risk tension, and they all have stayed in the background, which have kept gold as a safe haven asset and its demand relevant again. So the World Wealth Council second quarter report added an additional important context, because the total demand, including OTC, was broadly stable year over year, while central banks bought almost 300 tons of gold in the second quarter, which is roughly 62% up from a year over year. So additionally to that, the bar and the coin investment, the physical part, so to say, also stayed active, while jewelry demand remained under pressure from high prices. That tells us, of course, something important about the current markets. The stronger part of demand is coming from central banks, investment channels, and diversification rather than retail enthusiasm. Supply is also slow to respond, as always. Gold mine production can improve, and higher prices help, of course, the margins. But gold supply, to find a new supply is very difficult and doesn't appear instantly, as we know. So that keeps, of course, gold sensitive to investment flows, central bank demand, and also the macro landscape. So overall, the July was a recovery month, I would say, for gold, but it was still very cautious recovery, I would frame it. And the long-term case remained, of course, supported by hard asset demand, reserve diversification, and some monetary uncertainty. So in the short term, the market is still being pulled by rates, the dollar, and the inflation, and of course, the geopolitical risks. In the second part of us, we always head into our Bitcoin segment, so to see how that has performed. And in the July month, this has been more of a repair phase, I would call it, in Bitcoin, because after some heavy pressure in May and June, the market has stabilized now, and the recovery still has been quite cautious. So the strongest evidence came from the ETF flows. As Coindesk has reported, the US spot Bitcoin ETFs were on track for their smallest monthly inflow ever, with only around $200 million on net inflows by July 30th. And that has come after basically 2.44 billion have been the outflow in May and already 4.5 billion outflow in June. So July was actually was better than the previous 2 months, but it's still far from a strong institutional demand. But of course, the positive signs are there, and Bitcoin ETFs have recorded several consecutive weeks of inflows during July, which showed that institutional demand has started to return in some way, but on the other side, not really. So it's still in the open for discussion. Of course, as we see, the sizes of the inflows are really modest, and of late month, the outflows showed that investors were still quite cautious and very careful on that regard. I would be the same, to be honest, because I remember there is a saying, sell in May, go away. And we really saw that in May. So the importance here is that Bitcoin ETF flows have become one of the clearest indicators of institutional appetite. And when the flows are strong, they can support the momentum. But when they are weak, Bitcoin becomes more exposed to the macro conditions, such as liquidity pressure and risk sentiment. On that regard, I think it is important to note that Ethereum has performed better in relative terms when it comes to Bitcoin. And CoinDesk reported also there that the Ethereum ETFs attracted more capital in July than the Bitcoin ETFs by the end of June and by the end of July. And this is important because that shows some kind of rotation happening inside the crypto market, with investors looking beyond Bitcoin and while still staying on the sidelines, let's say, and quite selective of what they're actually investing in. So for crypto overall, July was a month of stabilization, I would call it, and not really an acceleration. So the market was no longer in the same heavy outflow environment as in June, but institutional demand has been still quite cautious. So the key question for the second half of the year is whether stronger ETF demand returns and whether regulatory clarity and the macro conditions and the product adoption can actually support a broader recovery or not. And of course, in our next part, we always cover the real-world assets, which continue to mature even further in July. Tracking platforms showed that market continuing to expand across stablecoins, tokenized treasuries, money market products, credits, equities, and other commodities, and of course, many mixed synthetic financial assets. They're all up and coming. And on this regard, Ethereum has remained one of the largest networks by tokenized RWA value, while other networks such as Binance Smart Chain, Avalanche, Arbitrum, Solana, they all keep growing, but not at the same pace. So it always plays a role who has the biggest network at a time and who has the most total value locked on that network. This is also the reason why we have chosen the Ethereum network as our main network. And we will be expanding, of course, to other networks too. But for the meantime, we will stay on the Ethereum as a main chain. But I think that the total value locked also in RWA projects and in general will continue rising, but it will take more time on the other networks. And I think this matters also because tokenization is becoming a distribution and infrastructure problem, where issuance is actually only the first step, and the asset also needs wallets, it needs settlements, it needs custody, it needs reporting. You have to be able to have compliance and a reason for the user actually to interact with it in a digital way. So a reason, the meaning behind of it has to be clear. So treasury and money market products remain the most mature part of the RWA section, I would say. And products like BlackRock has built BUIDL, and Ondo has built USDY. Franklin has built Benji, and all of these are now up and coming. And other also short duration instruments. They make sense because they can connect what has been familiarly already used in the industry, in the financial industry, but also now has a digital settlement layer, basically. And of course, the market is becoming broader because tokenized equities, ETFs, became one of the clearest new things in the July month. And don't forget, tokenized gold also stayed important inside this category. And gold is one of the cleanest of the cleaner bridges, I would say, between the physical assets and the digital rails. So because people already understand the underlying asset, the harder question in this case is about more like the custody, the redemption, how can you actually be transparent on chain, how does the pricing work, and how does the whole thing connect from the digital layer to the product layer, like on the real world asset. So this is actually basically the issue that everybody has to be able to solve. We are trying to solve it by being as transparent as possible, being able to give out as much information as possible. And the strongest tokenized products at the end will win because users can understand what stands behind the asset, how it's recorded and maintained, and how the product connects to something real and tangible. So this is the important task. On our next segment, I think is always, yes, we have always the concession. And at the concession level, July was focused on practical operating improvements at our concession in Minerales San Hilario in Peru. The team has continued additional geological exploration to support the development of an additional quarry. And the work gives the team more geological clarity before any new extraction areas are prepared. And it helps expand also the operational planning base around the concession. So there was also work on the operating structure, as I'm aware of. And then as part of the cost optimization work, selected functions are being moved to outsourcing, and some personnel changes are also being made, which will then help the team improve the structure around the concession, keep the production base more efficient, and the activity, when the activity actually picks up, it has to be very streamlined. So this is very important. Another important update is site infrastructure. And as mentioned already, new drainage channels are being built together with additional settling pods. And if we can, we will always, when they're finished, also display it in the next update. These are more on the practical upgrades, but they matter for daily site management, and a better water flow control and settling infrastructure support a cleaner, more stable environment. And this work is actually what enables the mining base to become stronger, more resilient, and better operationally. We'll have a clearer geology, a lower operating pressure, and infrastructure that makes the concession to be built around much easier over time. And of course, these upgrades are all very necessary, and we're happy that they're being conducted in such a fast manner. In our next segment, now let's get over to the Ayni Gold app as always. On the Gold app, the July updates for us was, of course, again, a busy month. We implemented a new design for the email notifications, and if you have received our emails consecutively, you will see a lot of updates there, also on the design front. So now also when you use the app, you will receive emails, and you will be able to see the OTP, for example, in a different manner. You're also able to update your preferences on the emails, or the weekly digest, for example, or for the updates that we give you when you get the rewards. And we have added the ability to cancel now also your sale position. If you have enabled the gold unit and you've put it in the sale on the marketplace, then you're able to cancel it now from the dashboard. So this is also very easy now being handled. And this you've also improved some filters on the app. So if on the official market shop and the marketplace, you can now select multiple price ranges at once, and the number of available gold units will update instantly and correctly depending on the filter that you have applied. So on top of that, you can now also see visually how many gold units are still available on the market and which one have already been sold. And also, last but not least, we have added some additional tooltips for easy navigation throughout the app. And in the next month, in August, we will be adding some revamp on terms of navigation. So we will make it also easier on that regard for new users, especially. And finally, we've also took out the mandatory email verification when purchasing a gold unit for users who have signed up with a wallet address. Also very important because we want to make the flow as fast and easy as possible. Now, July was also an active on the ecosystem and education side. We have continued joining broader conversations around real-world assets, tokenized markets, and how physical value products can become easier to access through digital infrastructure. And one of the main ecosystem moments was our tokenization discussion, which we had with the League of Traders, which was super fun to be part of. And if you haven't heard in that AMA session, actually, you should listen to it. And it was super exciting and with a great panel. And the conversation basically focused around the direction of tokenized assets, on stablecoin infrastructure, on how RWAs are becoming easier to package, to distribute, and use across digital markets. And also, additionally to that conversation, we hosted a roundtable with Zoff and Lumishare, and their next phase basically on tokenized real-world assets. So that discussion was also super interesting because it brought together different views that we had on how platforms can connect users with real-world value flows. And the conversation touched on gold production, renewable energy, which was super interesting, and user experiences across the app, and also how we can bridge basically the gap between the Web 2 and the Web 3 rail. So people who come from both should be able to navigate easily in the ecosystem. So for Ayni Gold, these conversations, of course, are useful because they show where the whole RWA market is heading at. And the real question is whether people can clearly understand what stands behind an asset and how the access actually works. So how the digital layer connects back to a real-world activity. And this is why the education remains an important part of the ecosystem. And we want to expand as much as possible into that. So in July, we continued using live discussions, video formats, and market updates to explain the connection between gold, tokenization, and real-world production in a more practical way, basically. So for people discovering Ayni Gold, this matters because the model should feel concrete and self-explanatory. So it should be clear what the asset is connected to, why the mining of the foundation matters, and how the digital access can make that relationship easier to follow. And I hope that through this educational content, we can achieve that. And now, as always, in our last segment, we have our Q&A with a couple of great questions again. Always keep them coming. We read the questions and we try to take them in then for the next video. So the question number 1 was, what happens if production from the concession is lower than expected a given period? How does that affect gold units and user rewards? This is an excellent and very practical question, and this is super important to answer because a gold unit is a fixed participation tier inside the Ayni Gold program. So it is linked to the mining activity at the licensed concession in Peru from Minerales San Hilario that we mentioned already. And the reward for each period comes from the actual program results from the gold unit. So that includes, of course, the gold that has been extracted, the gold price, the operating costs, the program fees, taxes, royalties, and the program rules, basically, that are behind it. So we've put a lot of work into making the model resilient because real-world production can always have variations and variables. So if production, for example, is lower than expected or costs are higher, the reward for that period will also be lower, obviously. But the same logic also applies in the opposite direction. So stronger gold prices, stronger production, and better operating efficiency can improve the economics of the model. So it is very important at this case to always note that the operating costs of the mine itself lay between $1,500 to $1,800. So with the current gold price sitting above $4,000, we have a very long way to go where we would have to think about substantial impact to our business model. And this is also a form of robustness, I would call it. So this is very good. Excellent question. So now let's head to question number 2. If I buy a gold unit today, when can I claim my first reward? Also a very important question. At the moment, gold units follow the regular quarterly reward cycle of the program. So rewards are calculated and reflected on the user dashboard, and you can see them added each day where the concession is actually operating. So they become then claimable after each quarter. And users can see their gold units reward status. You can see the progress. You can see the available reward information directly inside the Ayni Gold app. So very important, you can just navigate through it and you will see very transparently how the reward is being generated. We're also preparing now an update for new users. Keep tabs on that, because with the update, the first claim will become available after 14 days after buying a gold unit. And this is very important because we want to enable the possibility that users that join don't have to wait so long of a period in order to see how the mechanism functions. So for that, once the 14-day basically have been passed, they will be able to do their first claim, and after that, the 90-day cycle will continue. So basically every quarter. And I think this will make the experience easier to follow from the beginning. Users will be able to track their gold unit. They can see their cycle progress and understand where rewards become available from their account and how actually to claim them. Amazing. So this wraps up the Ayni Gold update for July. July was for us a month of recovery, refinement, and practical progress. Gold found support again as markets reassessed rates, inflation, and the dollar. For Bitcoin, it has moved through a cautious repair phase with ETF flows improving from June, but still showing limited institutional appetite. And real-world assets kept moving into a more serious phase where the strongest products need real backing, clear data, and a usable infrastructure actually to be able to cater to the users who are using the platforms. So for Ayni Gold, the month was about building across both layers of the model. And at the concession, where the team has continued the practical work around geological exploration, the site infrastructure, water management, and operating structure. And across the ecosystem, we continued building the conversations about education around gold, tokenization, RWAs, and real-world value. So if you want to explore, of course, our gold units, visit the Ayni Gold app and open the Ayni section. If you want to follow future updates, subscribe to our YouTube channel, join the Ayni Gold Telegram community, very important. You will find always the latest briefings and updates there, and of course also on our website. Thank you for watching. This was the Ayni Gold update for July, and see you in the next one. Have a good day.